Well, the price of gold has hit yet another record high. An ounce will now cost you more than $4,000 as investors flock to the safe haven asset.
The price has jumped by around a third since April, when US President Trump announced a raft of trade tariffs. It's gold's biggest rally since the 1970s.
Well, the rise in gold prices is hitting jewellers, with some resorting to price increases and using alternative materials. Justin Urquhart-Stewart is an investment manager and a veteran business commentator. Justin, good to see you. Thank you very much for coming in. I mean, gold always soars at a time of uncertainty. Clearly, investors are feeling that uncertainty now. What are they worried about?
Well, how long is the list? There are a lot of things we can get concerned about. Well, first of all, they actually had markets around the world have all done very well indeed. But add to that, then, what happens to the global economy? Is the global economy peaking? Is it going to start slowing down again? Then add to that the political issues we've got in terms of what happens in Ukraine and other areas of the world which are looking more unstable. So there are lots of things to worry about. But markets love climbing a wall of worry. Otherwise, what would we be doing? So basically, people are now saying, actually, let's find something safer, but be wary of gold, because, it's all very well. It goes up in price, goes down. It doesn't do anything else. For investment in the longer term, it's compounding of dividends and those returns. That's how you make your wealth. With gold, you can look at it, stare at it, lick it. That's about it. So, yes, in times of fear, but be wary. The price has been shooting up over the past year, as you were just saying. And be careful now, because this year's fashion fad tends to be next year's tank top. So you always see when those asset prices reach a certain level, and they've got a record for this year and last year, be wary. There's a very good chance it could be the worst performer next year.
Well, one industry that's stuck with gold, if you like, is the jewellery industry. Obviously, it uses it to make many of its products. Their costs have now gone up, of course, and they must be passing some of those on to the consumers. And
passing on, but also rather worried, because it's getting so expensive now that people actually put off. Because, yes, they'd like to have gold, but at what price? And also, if they're going to buy gold, then, is this a long-term investment, or is it just purely decorative? Remember, countries like India, you can have a wonderful piece of decoration. It's the weight of the gold that's important. But also, now be careful, because of the calibre and quality of it. So be wary. This is exactly the moment when you start seeing other people trying to devalue it by adding other substances. So how pure is it actually going to be? So for investors, be very wary indeed. And if you're actually holding physical gold, do be careful, because people can nick it. Much better, actually, that people buy probably via a gold fund, and that is reflected by actual custody of gold in secure places like Fort Knox and elsewhere, rather than necessarily worrying about having it at home, even if it's in a safe.
Your health warnings are noted, but the uncertainty around the world doesn't show any signs of going away, does it? So this high gold price, will it go higher, perhaps? And you've got to get your crystal ball out on this, haven't you? Where's it going to go?
Well, it's only one of two ways, isn't it? Up or down. But no, the momentum of the private investment market coming out into this could push this further. What's interesting, actually, is a number of institutions now actually starting to take some profits. That's the time when you actually have saying, right, now actually the professional investors are starting to pull back. They've already made money. They've, as far as they're concerned, they'll be shutting the shop up for that particular asset class, bank that, and let's wait for the next one. And it's always the case when you know the market's reaching a peak, when the private investor, the poor private investor, comes in at the top, suckered in by yet more opportunities, saying, it's a record price, it's going to go where? So be very careful indeed.
So you've said be wary, be careful of gold. So what other safe havens are there out there if investors don't fancy buying into gold?
Well, I mean, the good news is actually your long-term returns in stock markets are precisely that. You've got good quality companies which are making returns, making dividends. Those dividends are vital, that compounding of over time. With gold, how often does it take to actually double your money? With companies, you can sit there and say, if I've got a 7% return, I'm going to double my money every 10 years. That may not sound wildly exciting, but if you're doing financial family planning over the generations, that's what you need to have. Don't be rather wary about investing in those ones which suddenly become that fashion for the moment, only to look really rather embarrassing a little bit later. I know, I've done it too many times.
Justin, thank you very much for coming in. Justin Urquhart-Stewart, the investment manager and business commentator.